Welcome to Tradespoon. My name is Val Carpel. I'm CEO and founder of Tradespoon. And today I'd like to go over a weekly strategy roundtable, current market conditions, and any questions you might have about your Tradespoon membership or Yellow Tunnel membership. I want to welcome both Tradespoon and Yellow Tunnel subscribers to this event. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. Always want to welcome new subscribers. I was executive Brad first, perfect. Welcome. If you're new to Tradespoon, welcome. Or Yellow Tunnel, Brad, welcome. This is my brief bio as Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. I'm very proud of that experience. Since I left Options Express, I started Tradespoon in 2012, started Yellow Tunnel in a year ago, 2019. Tradespoon specializing in modeling and technology. Yellow Tunnel was specialized in trading psychology. But both companies, I'm the founder of both companies, and those are the differences. So I want to welcome both Tradespoon and Yellow Tunnel subscribers. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally. I've been trading and managing my own money. I've been doing that for over 15 years. Mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. And now trading psychology. I don't have a degree in trading psychology, but one day. Disclosures: trading stock and options involves a risk and not suitable for everyone. You must be aware of the risks and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, before we get into a trading system, let's talk about current market conditions. I'm looking at the spiders ETF. Pretty, this is a pretty strong sell-off from yesterday. We dropped from the all-time high 320, not all-time high, but from recent high, from the 323 that's been overhead resistance, all the way to 301. So from my perspective, market is oversold, right? We've touched the 200-day moving average, rebounded back all the way to 308, pulling back. But I think 200-day moving average is a strong support. I think it's here to hold. Potentially market can overshoot either today or tomorrow to 294, but short-term market oversold. We're on the bull market. It is a summer, so the volume is down, and that means that the market is prone for bigger moves on lack of liquidity in the market. So you can see exaggerated effect potentially reaching, I think the next level of support is 296, but you can see rebound today. I would watch the closing of today. I think if we close towards 311, I think the market will continue to rebound, either today or early next week. But I think short-term market oversold. We're approaching end of June, so I do expect a market to rebound from the 200-day moving average. Right, 200-day moving average has been a strong support for the market. So I personally would be a buyer at 300 or 295, and but also I would be a seller at 320. At this point, market, this is a pretty significant correction on the fear of on the second wave of the new coronaviruses and potential partial or full lockdowns in different states. So none of this information is new, but I think at this point, market has set the top at 323. It has set the short-term support at 300. So toward the end of June, I expect market to do something like this. either starting today, retrace back to retest 320 in the next couple of weeks, or potentially we'll see where the market closes today and Monday, but potentially maybe overshoot and then still go through 320. I think the stop is set short term, right? And because of the significant correction on the above average volume, and then the market will have the 10 to 15% correction we've talked about. It. From 323 side, this is around anywhere between 290 or 270, right? So 290 to 270 market will rebound and then continue rally. So this is probably expectation sometime either July, right? This is either July or August. We'll have 10 to 15% correction. And you can see yesterday was a perfect example. And any market is overstretched, and any negative news market can sell off. What are the main drivers behind the market? I think dollar. I would keep an eye on the currency. The rally was the main reason for the rally was the sell-off in US dollar. So I think short-term US dollar you can see is rebounding, and that's putting the pressure on the market. But I think 98 and a half is overhead resistance, and at this point it will sell off. So I would keep an eye on the dollar, but this is one of the reasons for a bull market and continuation of the rally. Probably one of the main reasons are the currency market. They have been strongly correlated to the exchange, to the equity exchange recently. So I think this is going to be a short-term rebound, but again, we'll have lower lows in the next few months. Also, Treasury market, again, strong sell-off on the unemployment numbers, better than expected unemployment numbers, rebound to the support level. Looks like a pullback today, potentially can overshoot to 168, 172 level, either today or next week. But again, path of least resistance for the Treasury is to higher yield. So I think short-term Treasury will pull back again to the 156 level. We see rebound in financial sector today, giving up some of its gains, industrials and technology. So that's the view on the market. How do you, Brett, welcome. So how do you trade in the current market conditions? First of all is trading psychology, right? So we talked about Yellow Tunnel. It's, if you're a member of a Yellow Tunnel, welcome. If you don't have membership in Yellow Tunnel, I encourage you to open up an account. It's a free account where we talk about trend in the market, blog, and different topics on trading psychology. We have a monthly webinar with Dr. Maneker. Let me log in. So we have webinars with Dr. Maneker, who's a clinical psychologist and also professional trader. So I encourage you to review those videos, how to deal with the inner market and how to deal with trading psychology. And from my perspective, some of the things that I've learned from Dr. Maneker is, you're looking at the QQQ, and this could be a true breakout, right? Where the market QQQ in the next 2 to 3 weeks will continue to go higher, potentially retesting the recent highs, 247, 250. Or if there's any events next week, market can pull back to the downside. So from trading psychology point of view, you have to have an opinion on the market, right? Which direction it's heading, whether the support will hold or will not. Most of the time when you do have a breakout and then you do have a pullback to the support level, market does rebound. So I'm placing my opinion that technology will rebound back to the 247, 250 level. So But I realize that this is not 100% certainty, right? Maybe 70% of the time when the market pulls back to this multi-month support, it will rebound. But 25% of the time, it could be a false breakout, and the market can continue to sell off, not in July, but in June, right? I could be wrong on timing and could be off by a couple of weeks. So it's very important to go through these future forward exercises, where you basically look at the support and resistance level and you ask yourself, if the market is going to continue rally, let's say 250, what will my portfolio will look like? And how will my positions perform? How much cash do I have in my account? Am I over leveraged, right? So maybe 5% to the upside in the next 2 weeks. Or let's say this is a false breakout and next week, maybe more news, maybe Texas or Florida will actually institute a partial lockdown. And if they will, I think market will sell off and we won't have a rally. All right. So there's I think there is a significant chance that this is a false breakout and market can continue to sell off. So fear of future regret is one of the main drivers in terms of how much of my funds I'm allocating into equities. If I'm concerned that the market is overbought and I know that in July there's a potential sell-off and the market is overbought, then potentially this is a good time to start downsizing your position, especially into any rallies. Right, next 2 weeks could be an opportunity to start trimming your long positions and be prepared that in July continuation of the sell-off. Right, so consider both scenarios. You should invest money with your opinion. My opinion, in the next 2 weeks we will retest to 47, so I'm structuring my portfolio accordingly. But I'm also hedging my portfolio because I do anticipate, maybe not in June, but in July, that sell-off will continue, 10 to 15%, and we are still in the bull market. So trading psychology is important. That often determines, but sometimes people ask me, when should I exit the position? That's probably one of the favorite questions, one of the most common questions I get. At what level do I exit position? I think exit of position should be driven by your trading plan, right? You have a target gain and stop losses, and we all have different target gains and stop losses depending on where you are on the risk tolerance level spectrum. Everybody will have different target gains and stop losses. I personally do, for long-term trades, when I trade options, I do 50% stop loss on my options positions and 20 to 40% gain. Right? And I'm looking for 75% accuracy. If I'm doing day trading, I have 1% stop loss using the stock level and 0.5% target gain. And based on where you are on the risk tolerance level, you will have different parameters. When there's a resurgence of at stay-at-home, you can see that brokerages firms have a new wave of opening of accounts, and average age is 30 years old. So one of the reasons market rallies because there are a lot more participants in the market at a younger age. At a younger age, your risk tolerance level is much higher than when you are, when I am now in my 40s. So something to keep in mind that not everybody has the same risk tolerance level, but it's important to have a trading plan. So if you want to have higher return on capital, you can trade higher beta stocks, but then you should probably downsize your positions, but still follow the same rule in terms of how much cash you should have and how many positions you should have. You can have a higher risk tolerance for portfolio drawdown, but you should not risk 100% of your portfolio in the market. So that's the trading psychology. Let's look at the Happy Friday, Bob. Faye, I'm gonna go over SPY position. Give me just a second. So the trading system, first step is to have a trading plan, right? My trading plan, when I trade in the live trading room environment, I do long-term and short-term trades. You can find my trading plan. It's also available on the website. You can modify it. But one of the main rules in my trading plan is first is cash, right? You have, on average, I have 30% of my portfolio in cash. The second rule is portfolio drawdown. Doesn't matter if you're at 30 or if you're at 60, you should be aware of how much exposure you have to the market. So right now I have 10 positions, less than 10 positions, but around 10 positions. So if I have 10 positions right now, options position, and they are 5%, I allocate 5% of my portfolio to each position. So I allocate 50% of my portfolio is in stock market and 50% of my portfolio is in cash. If market sells off, if there is a continuation of the sell-off, right? Let's say Texas will partially, and Miami and Florida will partially shut down their economies on the resurgence of new cases. If that happens, let's say next week or 2 weeks, market will quickly sell off, and we saw an example of yesterday. I don't think that's going to be the case, but I realize there's a probability that this event can happen. So then I look at the portfolio drawdown. I have 10 positions, 5% each. That's 50%. My target, usually I exit the position at 50% stop loss, unless there is a quick sell-off like we had yesterday. And I have at the money options that expire this week, like I had with Honeywell, and sometimes you can't execute 50% stop loss. But most of my positions are 50 days till expiration or more. That's why it's very important, if you are trading options, most of your positions should not be close to expiration, right? I would say it should not be less than 30 days till expiration or 45 days till expiration. You see most of my long positions, I trade September, I trade October, because I do realize that summer will be volatile. So at least if the market does reach 50, at least if my position reaches 50% stop loss, I can exit those positions at 50% stop loss. So 50% allocation, 50% stop loss. That means my portfolio drawdown could be as high as 25%. Probably for experienced trader, for aggressive trader, I think that's okay. I think it's on the higher side. I would encourage you, if you're new or your risk tolerance is low, maybe have only 5 positions at 5% allocation each. Then your portfolio is 12.5%. And if this is too much exposure, then you would hedge your portfolio. You've seen an example where I hedged yesterday with the Spiders credit call spread. So either credit calls, Spiders credit call spreads, or debit put spreads. I'm continuing to hedge my portfolio in the market. Or you can do a cover call, or you can do market neutral strategies such as butterflies or condors. So continuation of hedging your positions helps me to limit my exposure to the market. So cash is number 1 rule. How often you trade, how much you allocate, what your portfolio drawdown. I would say that this is the second most important rule. The third rule is position management, entry and exit, target gain and stop losses. This is very important task. It's very important to have before you enter position the target gain and stop levels, and make sure you follow that trading plan in terms of what your target gain and stop losses. And we go through different exercises during live trading room where I explain how to manage position entry and exit. And a lot of that, again, depends on your portfolio drawdown and what your risk tolerance level is. But that should be determined ahead of the trade. If I'm looking for 50% stop loss on options position and 50% target gain, some members are looking maybe 50% stop loss, 100% gain. So they are looking for higher return on capital with the realization that their probability of success will be smaller, right? So that's the offset. You either look for higher probability of success or smaller return on capital. So the goals for today, to go over different services that we have and answer any questions that you might have. Let's look what, so at Tradespoon we have, I'd like to talk about 3 different buckets. One is the bucket of live portfolios. So if you, elite membership, if you have an elite membership, you can see that if you're part of a membership, excuse me, we have a morning bell and the closing bell. This is a live trading room environment. We also have a trader log where you can actually see all of the trades that I'm doing today, closing the earnings strategy and downsizing some of my hedges that I had for Microsoft Hedge. So via trader log and SMS message, you will get real-time alerts every time I would trade. So that's Microsoft and COUP. So these are example of the trades that I'm doing during live trading room. That's and you can see it via trader's log or SMS message. Let me see. So that's live trading room exposure, trader log, and SMS message for every time I trade. And the positions that I trade are driven by 3 models. Active trader is a model that provides prediction for 1 or 2 days. Monthly trader is the monthly model that provides prediction where the holding time is 5 to 20 days, and the model is 45 days out. And then we have weekly model, 2 to 5 days. So 3 different models that I trade in a live trading room. One is monthly trader, weekly trader, and active trader. So that's elite portfolio. If you don't have time to trade during the day, if you don't have time to either look at the trader's log or look at or be part of the live trading room, and you're looking for maybe 1 or 2 trades a week, we do have premium portfolio. So premium membership gives you access to stock, option, and option spread trades. I personally trade option spread. You can actually see at what point and when what was the price of execution. So this week, the trade was TJX, right? So I'm long TJX, and I personally trade option spreads. You get an instructional video that explains you if you're new to options trading, or if you want to know why I got into this trade, then you get an instructional video that explains you why I got into this trade, how am I hedging the portfolio, and what is my outlook on the market short term. So you get instructional video, you get again your return on capital, your probability of success, and the date by which this trade idea is valid till. So that's premium portfolio. We also have a Robo Invest. Premium portfolio is where I trade option spread strategies. If you're not comfortable with trading option spreads, you can do stock or option trade. That's also valid. Or if you feel more comfortable trading stocks, we also have Robo Investor portfolio. So Robo Investor portfolio is geared towards stock trading. If you're managing your portfolio like 401k, or you want to outperform the market, then we are providing 4 recommendations a month. So you get at least 1 trade idea a month, and you can see all of the open orders. You can see the entire portfolio. You can look at the performance of this portfolio. Where I trade stocks. Again, you get orders, positions, you get SMS message every time I enter a position or every time I exit the position. And you also get different tools that help you decide whether it makes sense to stay with this position or not. And every 2 weeks, we are providing a newsletter explaining the current market conditions and why we enter in certain positions. So this is the live trading room environment. We have premium membership where you have access to Robo Investor and premium membership and the morning bell. And elite circle, you have access to morning bell and closing bell. And also you have visibility to every time I trade, enter or exit position, right? Which is synchronized real time with my account. All right, Faye, 309 put July 2nd. I think if you bought July 2nd, again, I usually want to give myself a little bit more time to enter the position, right? I personally think you can see the market pulling back. So today close will be very important. We'll see if we are gonna, two things will happen. We're either gonna break these lows, right, and drop below, maybe to 296, or we're gonna close, at 312. Market is still pretty volatile. So I personally think that July, if you bearish July 2nd, that's not enough time. I personally think that the market is gonna continue going higher next week. That's the way I'm trading. So if you just have long put, I would at least consider doing debit spread and know what your well-defined losses are. Because if you have July put, especially when market rallies, you have a quick deterioration of its premium, right? Because VIX, right? That's the issue with trading puts, is that if you bought put at VIX at 41 and then it dropped to 35, right? VIX just moved 50% up. So at least consider trading spread. If you're buying a put, sell out of the money, leg into a put spread. But I personally think that next week we will rebound from these oversold conditions. Market obviously can overshoot on a low liquidity at 295, but I think it will drop and rebound. And I would watch the closing price today, very important. So Fed, look at, I think your hedges should be 5 to 7% of your portfolio. I think being 100% short, if you have a hedge, if you long QQQ and you have a hedge, I think it's okay. But if you just short market, I think you're a little bit early. I think the market is oversold and will rebound. But I would wait till at least closing today. Let's see where it ends up. But I think short-term market is oversold and will rebound. What was the reason for closing Microsoft spread? Let's look at the. So I'm out of the Microsoft long trade, right? So in the premium service, I bought Microsoft call spread, right? 165, 170 call spread, bought it at 320. Excuse me, and I'm out of this position at $4 because I don't think that Microsoft would break through the overhead resistance. It did break through the overhead resistance, and I closed the Microsoft when it was at 189, the long position. The short position I closed now because I think, again, for the same reason, because I think market is going to pull back short term, but technology is going to continue rallying, right? We have kind of this strong sell-off here, and I think technology will rebound back. So that's the reason why I closed. I didn't close the entire position, but I closed half of the short Microsoft spread, because at this point I have, downsized a lot of my long positions. I downsized a lot of my long positions, and I'm adding to my short position. So at this point, I think I have too many hedges, right? So I'm looking at my overall portfolio. I'm looking at my portfolio delta, and I think at this point, I want to have positive portfolio delta. I still think that the market can continue going higher in the next couple of weeks. So that's the reason. But I'm holding on to my hedges, right? I sold the 310, 320 call spread yesterday on the sell-off because I think by August, July, I think it's too early, but by end of August, I think market will trade below 300 level, right? it might not trade below, I mean, it might reach 295 level next week, but I don't think market will trade below 295 in the next week or two. I think it will rebound back to 320 and then drop by 300. So that's the reason that I'm going further out and trading August hedges. How could a new person keep up, Jay, with new trades? So again, market is volatile, and sometimes I trade, during live trading room, but sometimes it's my personal account. Sometimes I trade outside of the live trading room account. So the only way to see every time I trade is to actually look at the trader's log, right? So yesterday I closed the Honeywell spread that went against me. I opened Delta Airline, right? I opened Delta Airline when the market sold off. I opened XLF, re-entered those positions. So sometimes it happens during live trading room, but sometimes market volatile and it trades outside of the live trading room. So if you want to see, if you're a new trader, you want to see every time I trade, then the best thing is this trader log. You get SMS message and you get a trader log, and you can actually see when do I enter or exit positions. Model is bullish next 10 days. Let's look. So right, so model is still bullish next 10 days. I don't think that the bull trend is broken yet, right? So I would keep an eye where we're gonna close today, right? Looks like most of the gains we gave up today, but I think next week market will rebound. Right, Faye, I think the right thing to do is to look at your portfolio delta. Most broker dealers will show you what your portfolio delta is, and you can see that a positive number or negative number across all your positions. I think right now, from my perspective, you want to be market neutral, right? I think the top is set at 323. The best case scenario, I think the best case scenario in the next 2 to 3 weeks, we will retest 322. Right, that's the best case scenario. In the next 2 to 3 weeks, I think the worst case scenario, we will retest 280, right? So we have 20 points to the upside and 20 points to the downside. I think this is where the market is going to trade in the next, 4 to 8 weeks. It can potentially overshoot to 330. I don't think that's going to be the case. It can potentially undershoot to 270, 260, which I also don't think is going to be the case. So I think next 4 to 8 weeks, we're going to trade in this range. So if you agree with my opinion that we're basically at key support level, I think short term there is more room to the upside, right? I think short term we will, if you ask me which level we're going to reach first, 320 or 280, I personally think there is a higher probability that we will reach 320 first before we will reach 280. So that's why I think if you look holistically at your portfolio, you want to be either neutral, because we can drop 20 points or we can go up 20 points, roughly 10% to the upside, 10% to the downside. I think and we're in the middle of this range. But if you ask me which level we're going to reach first, I personally think we're going to reach 320 first, and then we're going to drop to 280. And hopefully that helps. And that's how I'm structuring my portfolio. I could be wrong. It could reach 280 first and then 320, but at least that's how I'm structuring my position. So I encourage you to look at first how many positions you have and what your maximum portfolio drawdown. That's the first number one. If I have to look at the decision tree, which decision is first look at your cash and what your portfolio exposure is, because I could be wrong, right? Market could drop to 280 first and then it go up to 320. In both scenarios, I want to make sure that I'm comfortable with my exposure to the market. So I'm looking at the portfolio drawdown, I'm looking at my portfolio delta, and at this point, my portfolio delta is slightly positive. That means if the market goes up, my portfolio is going to grow. If the market drops, my portfolio is going to slowly deteriorate, right? So that's my exposure right now. Right now, I bought Delta Airline I closed Delta Airline, I closed the XLF, I bought Delta Airline back, I bought XLF back because I think market is going to rebound. So overall, my portfolio delta is positive. If you bought hedges on X, or if you bought puts on XLF, IWM, and DH, keep in mind they're highly correlated. If Russell 2000 gonna sell off, then technology is gonna sell off, and Dow Jones is gonna sell off. So then look at what your overall portfolio delta is. If it's negative right now, if it's neutral, I think it's fine. If you're delta neutral, if you have positive positions and negative, if you have bullish positions and bearish position, if you're managing as a both long short portfolio, long short equity fund, right? If you have long and short positions that are equal to each other, but market neutral, I think that's probably that's fine strategy, right? If you don't really have an opinion whether whether the 200-day moving average will hold or not. But if you think 200-day moving average will hold, then you can be slightly positive in your portfolio, right? Based on, again, on your risk tolerance level, but with the realization that more likely than not, market is not going to break through the 320 level, not until October or November, as we approach elections, and with the assumption that Republicans will still be in control. So that's how I would look at the position. In terms of hedges, I think, at this point, as I said, I actually removed the Microsoft, I downsized my Microsoft hedge, but in terms of the spiders, I'm still holding the position, the short. So I don't think we're going to break out of 320 by end of August, so I sold 310, 320 call spread. So if this is something you're interested in doing, then that's something you can do. It still trades at $5 right now. So Raj, can you walk through your Fibonacci series trading? Sometimes we do have technical analysis. So if you're looking for Fibonacci retracements, I would go to Learning Center, technical analysis. So we do have a video on Fibonacci retracements. I encourage you to look at that. I also encourage you to go through all the events get recorded, live event recordings, and you can go to Active Investor Workshop and type in technical analysis. So this is where we talk about technical analysis, right? Live discussion, they're recorded. So we do have recordings on the Fibonacci retracement. Faust, thank you. I will take that into consideration in terms of improving the SMS message. Thank you. Jay, thank you for your feedback. We will work on the improvements of SMS message and trader's log. Raj, do we have any futures trading videos? Not in the live trading room. I don't trade futures, but we do trade spiders, and to me, spiders and futures, futures just give you leverage. So it's the same idea. You just are more leveraged, but we don't trade futures in the live trading room environment. We do have Stock Forecast Toolbox that you can use, and you can look at the futures. So that tool is available. So you can always look at that. Can you give me some info on weekly trade? I bought it Tuesday. So weekly trade, weekly trader, you go into weekly trader model. You have different trade ideas, MasterCard. So this week, obviously after the sell-off, it's down. But this is where you find AMAT. This is where you find your trade ideas. Weekly trade ideas, and I actually traded AMAT during live trading room environment. Right, so this is an example of the weekly trader. I sold it for 32 cents and I exited out at 48 cents when the market started selling off. So that's the aim. Treasury up, gold up, VIX up today. So we'll see. I think it's too early to tell. Again, I think we'll see where the close is. Well, I think there's two scenarios, right? Last 15 minutes of today, people don't feel comfortable going into weekend long, right? So market can potentially drop maybe to 296, 298, or market is oversold in a 200-day moving average and nothing really new happened, and people feel more comfortable in buying. I personally have, we'll see where it closes, but this was a pretty good rebound. Right now we are 200-day moving average. We'll see where we close. So join at the closing bell and we'll see. I think either today we're gonna, break through 311 or next week. We'll see where the market ends up. Raj, thank you. Right now, I don't want to buy more hedges. I actually close Microsoft hedges because I think market is oversold. So I'm not buying more hedges. If I keep the reason, one of the reasons I keep the Microsoft is I close Microsoft hedges because as the market rallies, my portfolio doesn't grow, correlated to the market. It's almost neutral. So that's why I downside. I think market is oversold, so I'm downsizing my hedges. Kushik, in terms of seasonality, so long-term does look at seasonality. So if you look at this long-term model, the reason we recommended TJX is because 4 of 4 predictions are higher, and this model does look at seasonality, right? It looks at seasonality. We also show you a seasonality chart. You can see in June, usually market continues to go higher in June, right? You have a sell-off, and right now, I think market trade from seasonality perspective, it does exactly what it usually does, right? You have June, maybe some volatility, we're reaching, year-to-date high by June 19th, and then there is a correction toward July, right? So toward end of June, beginning of July, there is usually some correction. Sorry, this is TJX. So TJX, the reason for TJX is 4 of 4 predictions are higher. It does look at seasonality. From seasonality point of view, usually TJX continues to make new highs as you approach and go back to school, September. So 4 of 4 predictions are higher, strong seasonality. So so to answer your question, we do consider seasonality. If you look at the spiders chart, you can see that usually there's more pronounced correction around end of June and beginning of July. So that's this is my reasoning that I think either by end of June, or maybe in July, we will have this correction, right? And this is usually 10% correction, right? And then summer and September usually volatile, right? Market then rebounds, then drops again. So I think that from seasonality point of view, actually pretty strong correlation. I think this is what the market will actually do going into November. I mean, it's not going to be day to day, but we can be a couple weeks, off. So that's the seasonality component. And that's what's factored into the monthly trader model and signal. Carmen, thank you for your kind words. Would I do counter? I think short-term counter on Microsoft, if you short Microsoft and you want to just hedge, maybe go long Microsoft, I think is okay, right? So yes, so instead of a downsizing your short position, maybe you add back that spread that I closed and leg into a counter, because I think Microsoft will continue to lead the market, right, going into October. Yeah, Jay, I think in terms of, I mean, this is a very common question. You know, we want to know every time you trade, then it's a lead circle. I encourage you to try it out. A lead trading circle. Again, we give 30-day money back guarantee, and you will know every time I trade, you will get messages real time, right? As soon as this is synchronized real time with my brokerage account. Terry, good point. End of June rebalance ETFs. Yes, that can create volatility. Yes, yeah. So question was, so my opinion, short term we're oversold. I think short term market has best case scenario will reach 320. So limited room to the upside. And I think by July, we will retest 280. End of July, middle of August, we will retest 280. And I think market will trade in this range 320 to 280 for the next couple months. James, when is the closing bell? Closing bell is at 2 p.m. Central. I need to update this, but 2:45 p.m. Eastern. 1:45 Central, 2:45 Eastern. All right, I think that's all I have for today. Let me know if you guys have any other questions. Would love to answer them. All right, so market basically at this time, at session low, retraced all of its gains, and so yeah, I would look at the closing for today and see if this is if we're gonna break through the 200-day moving average or not. But right now we're staying right on this line. All right, thank you very much. I will see you guys at the closing bell, and if I don't, have a great weekend. Enjoy your time with your friends and family. Stay safe, and I will talk to you soon. Thank you very much.